Well, time for our quarterly appointment with the top brass of TCS. They've started the earnings season once again in a style. On expected lines, I guess markets were hoping good numbers from TCS given what the underlying commentary has been and how the currency situation has been favorable for Indian IT companies. So what is the way forward? TCS certainly has raised the bar by delivering good numbers, but in terms of an environment, in terms of an currency equation and what is exactly happening to the large markets and large verticals like BFSI, I'm just going to introduce the top brass and then we'll take the conversations forward. Gentlemen, welcome to the show. Thank you for joining us. Happy with the numbers?
Thank you.
Happy with the numbers?
Yes,
Who wants to answer that?
Of course.
Okay, it's a chorus answer. All of you happy with the numbers?
Very happy with the numbers.
Okay. Ramki, numbers were expected to be strong. Some would argue that there is a business and a large deal environment which is favorable, and currency is a massive, massive tailwind. It's like Sone pe suhaga, if I may use the Hindi terminology, right? Cannot get better than this for TCS.
I think one also needs to look at that two sectors which were quite soft in the last 2 years. They have started showing good signs, both BFSI and retail, and that has also helped. More importantly, our own strategy of very clearly the articulation of Business 4.0 and how it is making impact in very many client organizations in terms of their growth and transformation, and the ability to bring together the solutions based on digital technologies. So all this is coming together. Some of the bets which we took, as well as not necessarily bets, but the steps which we took to augment and strengthen capabilities, get into more and more areas, the way we are sort of articulated our the services strategy, all that is coming together. And of course, as you said, currency has also helped, so that is where we are.
With this kind of a currency tailwind, I was looking at your Q1 numbers and then Q2 numbers. The dollar realization has gone from 67 to about 70. That's a big jump. Margins guidance has not gone higher. Is this largely because you are investing in your business and you are happy to maintain that traditional margin band of yours?
See, we have been investing.
You started investing more because you have a tailwind now.
Yes, we have been investing, whether it is in our research and innovation, from where many of our platforms have come. We have been investing in terms of digital technologies, in terms of reskilling, creating the labs, etc. But more important also in terms of developing on the location independent agile, in terms of the workspaces, reimagining the workspaces, and so all of these has been happening and we'll continue to do that.
The answer I was looking for a perfect guidance band.
See,
based on where currency has moved.
See, we have said that our preferred band for the operating margin is has been what has been stated.
So this will not change because of
no. This I don't think we should not do that. Currency always is a factor, is important in that. So I don't think just on one quarter, etc., there should be an expectation of resetting of that. We continue to stay focused and we will continue to drive efficiencies. So that is the strategy.
Okay, Ajay, I'm coming back to you, but the difference from the BFSI space is it's not a small difference, because for the first time, I guess TCS has gone on record and said that apart from large BFSI clients, medium and small BFSI clients are also making a comeback. Correct me if my understanding is wrong.
That's right, yeah.
Okay, what does that mean? Because that is like saying that my entire BFSI vertical, which had issues because of slowdown in insurance, is looking good. And the smaller clients are also coming back?
See, if you heard the commentary from Rajesh also yesterday, he said that the growth is coming both from the BFSI services as well as the platforms. When you say large deals, they are primarily the platform deals. But the growth, if you look at our report, we said 3.75% in the BFSI vertical, and then what the platform deals are doing, that's been reported as the others and platforms. So both are reporting very strong growth. So we are not saying the growth is only because of the large deals that we signed up. There is an all-round growth across, in fact, all geographies, all industry sub-verticals. We are finding very robust growth in every place. In fact,
why has growth made a comeback? Why was growth missing 3-4 quarters ago? What has changed?
See, there is from a US perspective, we believe that there is a more positive environment with the tax reforms coming in. I'm not saying the tax money has come into investment yet.
So this is not a sugar rush. Is this permanent? You don't think this is a one-time sugar rush?
There is a positive environment, and by the regulatory environment is also softening up. So people believe that it's going to continue for some time, and they would continue to invest. And also, particularly in US, there has not been much of investment in the last few years. So now the environment is also giving them the confidence that they can invest now. And Europe, has always been growing for us, and Australia has been growing for us. The change is primarily US, where there is a more positive momentum coming in.
Okay. Ajay, 10,000 is the number which we got in terms of new employee addition. If my memory serves me right, I think this is the highest in 2.5 years.
Yes, about 12 quarters. 12 quarters ago.
Yeah.
FY16 Q2 is the time when we did about 10,600.
What does that indicate?
See, there are two things that we can look at it. One is from a demand perspective, it's the growth that we are quite confident of, and that's what I think we have mentioned. Second is the kind of skills that are required, and overall the business scenario itself is that we need new age technologies and things like that. So campus is one area. So that is one what we have made a total reimagination as far as our hiring process is concerned, because we have gone ahead with a TCS national talent test that we did. And what it does primarily are two things. One is it democratizes the talent intake. So no matter where you are, you can participate in this journey. And if you have the talent and if you qualify, post our test, and after that there are interviews, then you have an opportunity to participate and make a career in TCS. So that is one. Second is the entire elapsed time that it used to be about 4 months, that has been crunched into maybe 5 to 6 weeks time period. So it's a tremendous efficiency gain. So the business 4.0 kind of principles that we have been talking about for our external customers, we are implementing it for ourselves. So this is where we are. But at the same time, we have been talking about machine first delivery. So we have said it is human and machines, both kind of interplay that will happen. And more of low end kind of activity will be taken up by machines. But at the same time, there is enough work at the mid level and at the levels where you have to basically utilize the contextual knowledge that you have, the artistic kind of thing, the kind of innovative stuff that you need to do in order to continuously deliver for your customers. So as a result, you need the manpower growth as well. So it's both. So that's the way to look at it.
Will this number grow only, and are you likely to meet your initial guidance what you had at the beginning of the year?
Beginning of the year, this time we did not give a guidance.
We probably know how much you hire.
What is the number? So last year our net was about 7,700. So this time we have already done 16,000 in the first 2 quarters. And I anticipate that yes, our hiring will continue in the next 2 quarters as well.
Now you're hiring more, demand is coming back. The lever what you will have is utilization.
Yes.
Where will that settle now for next 2 quarters?
So at this point in time, utilization is pretty strong. It's pretty good. And given the kind of opportunities that are there and people want to get into different activities, people are retraining. So that has been the focus, where we have said that we are internally going to train everybody on digital, on agile, and we have close to 280,000 people trained on that. So utilization will be pretty good. So there is, it's not that you're hiring and then you're keeping people waiting for projects to come. Projects are there.
Now the demand what has come back is not very universal in nature, and I'm not comparing TCS with an Infosys or Infosys with a Wipro, but it's not very universal. It is restricted to few large companies, and that's the good part. Historically, when universal demand has come back, wage hikes have also made a comeback. Can I say this time that demand could come back, but wage hike may not be large, because wage hike may not be a very large industry specific phenomenon yet?
See, wage hike in a way is also linked to the kind of inflation that you have in different countries. That's what we have been saying all along. And we do our wage hikes once a year, primarily. And if there is any correction that you have to do, we will take a look at it. But our wage hikes are already done for this year. And I think over the years, if you see, we have been doing pretty good wage hikes in the industry.
No, the reason I'm asking you this question is that when we saw similar kind of a demand environment couple of years ago, closer to 2013, closer to 2014, wage hike was very universal in nature. And more than inflation, it was linked to demand. Because suddenly .com or new age startups, they started, and that time the wage hikes were very universal in nature. This time I don't think demand is very universal in nature, at least for the big 4 or 5 Indian IT companies. Accenture has not given a very rosy commentary also going forward. So will wage hike be a challenge, or this is something it does not bother you?
At this stage, I don't think there is no bother as far as wage hikes are concerned. Yes, the new age technologies, they will have certain demand and there will be certain play in the market, but at the overall level, there is no pressure.
Ramki, the second buyback already is at play. you're generating more cash flow. I just want to understand that for a long-term investor who wants to, let's say, invest in a TCS stock, and that's what we're trying to communicate here, where do you think the return ratios eventually would settle? You've given me a stated policy as to how much of your cash flow would be given in dividend. That's a board decision. We are aware of that decision. So I won't embarrass you to answer that question again. But what you've not answered, I guess, from a market standpoint is that where do return equity, return ratios eventually would settle? Because with buyback at play, the return ratios would improve.
Yeah, that would improve. And see, what we would be we are focused on is what is that return to the shareholders. That we have consistent to saying that out of our free cash flow, apart from any specific need in a particular period for any M&A, etc. Otherwise, about 80 to 100% of our free cash flow we will be returning, and that's what consistently we have been doing, and it's been in fact slightly on the uptick as well. So we will continue with that strategy, and it could be a mix of dividends, buyback, etc. So what it will do to the return is what it will do, right? And so we have been consistently increasing our the returns as well as the EPS. So that journey will continue.
Okay, gentlemen, congratulations. Thank you for joining us. In case you've missed it, well, your stock is the best performing stock on the Nifty this year. I always keep track of that. So congratulations on that. And are you enjoying the TV experience?
Absolutely.
Yeah. Liking in front of the television squad.
Thank you.
Okay, love to have you to see much more if you're going forward. Thank you for joining us.
Thank you, Nikunj.
Well, I have with me the man of the moment, the CEO of India's largest IT company, Rajesh Gopinathan, and giving in company is NGS, the CEO. Gentlemen, fantastic to have you back on ET Now. Thank you for joining us. Let's start in a damdar voice, Rajesh. This time it's been extraordinary, achievement for TCS in terms of delivery and all-round performance. When we started the year, a double-digit growth was a challenge. Now the view in the market is that double-digit growth is coming, but can that double-digit growth stretch to mid-teens?
The trick in life is to enjoy your success step by step. So,
is that an aspirational view to imagine? Because when I asked you double-digit growth about 2 years ago, when the change of guard happened, you said we are working hard towards it. I'm sure you must be very proud of what you've achieved. But is there aspiration to go back to mid-teens growth?
I think let's be very clear on this. We have worked really hard, and as a management team and as a company and all our associates. So it's something that I am personally very proud of. I want to really thank the team and thank both our customers and even stakeholders like you who have been quite supportive, because this was achieved in the face of tremendous odds and general skepticism all around. So it's a big landmark, and it's an opportunity for us to step back, enjoy it, as well as to reset and say that, okay, so this is done, where do we go from here? Most importantly, it actually is something that has got a very long-term value for us. Once again, we have shown that a technology cycle is not what defines the company. Our ability to go through technology cycles is where the long-term sustenance comes from. So I'm sure this is not the last time that technology will change massively behind us. And the next time when it comes, once again, we'll be able to rely and look back at our experience and reset ourselves. So it's very, very important both from the immediate term as well as from a long term. And this opportunity, this space that we have is something that we will invest wisely to think about what are the possibilities and what should be the basis. Should the basis be going back to mid-teens growth? Should the basis be further diversification? Should the basis be relooking at the business model and seeing what are the other elements that we need to add to it? There are many dimensions in which we could actually think about how we want to plan for the future. And I think it requires proper thinking through. And what this does, our ability to say that, okay, we have now achieved the target and we are confident that we'll both deliver on it this year as well as exit with momentum. It frees up a lot of mental bandwidth for all of us to be able to look at it in a more positive and in a more considered way. So allow us the time, and as we execute on it, we'll talk about it.
But just to understand that historically, every time when technology has migrated to one platform to another, whether it is mainframe, Y2K, enterprise, when the new technology kicks in, and digital is the new word now, it normally lasts for 3 to 5 years. So can I say in terms of a change of technology and change of growth, the momentum would be there for 3 to 5 years, and this is not just a seasonal sugar rush which has happened for 2-3 quarters?
I think so. The percentage growth, 60% and all, obviously is a sugar rush, but the shift into digital is now a given. So you will, and to see it in perspective, what we are calling legacy today was the digital of 2005. All the web services, the web-based technologies that were there were as transformative in the mid 2000 as digital is today. So the same thing will happen here also. There will be a large scale shift, and then later on something else will come and replace this. That is something that we need to embrace, because that is the lifeblood of this industry. This constant change is what keeps us relevant to our customers, and our ability to stay ahead of that wave and to invest in it and to embrace it and to lead it is what actually differentiates us.
Why are you growing faster than the competition? Are you gaining market share, or this is largely because the market itself is expanding?
By being good.
That's an academic answer.
Yeah. No, I think first is the overall investments that we have made in the last 12 to 18 months in terms of making our people digital ready, agile ready, and the kind of new products and services that we have created, which all this makes enormous sense and enormous relevance to our customers, right? So we are able to participate not just in the efficiency game, but also in the growth and transformation game. I think that's the key thing. And then the Business 4.0 thought leadership framework that we came up with, which essentially a framework that enables our customers to adopt the digital technologies in a more systematic manner and then drive their growth and transformation agenda. That has been phenomenal. It's been phenomenal amount of traction that we see in the marketplace across the verticals. And I think that's the key.
My next immediate follow-up question would be, I'm going to take the leap from my first question, which is the word sugar rush. American economy is expanding, and most of the global pundits are saying that American economy is in the last leg of its economic expansion. If the expansion stops because of macros, because of high interest rates, could that backfire for your business model?
See, there will always be something. There are many things that will be positive. There are a few things that will be negative. There will be a few constraints. Business is all about managing that volatility that happens, and then see what makes sense for you to operate, and then course correct where we have to course correct. I think the agility that TCS has demonstrated over a period of time in terms of course correcting and adjusting ourselves when there are issues that comes into the market has been second to none, right? I have seen this industry for the last 35 years, right? In every such situation when there has been a transition or when there has been something that comes up, whether it is Lehman Brothers kind of an issue or anything else, then our ability to listen to the customers, what makes relevant to the customers, and then internally course correct ourselves to stay relevant and quickly adjust ourselves has been the hallmark of TCS, right? I think, today, I think the economic indicators are positive. There is an overall buoyancy in the market in terms of how people feel, how the industry feels, and how the kind of investments that they are making, that some of the tax breaks, etc., that they have got, and the deregulations that has happened. All that means that, look, we are seeing demand, and we are out there with the right set of products and services to capture the demand.
Given that we are nearing the national election cycle, do you think our India business could be slightly volatile once again?
India business has both the public sector and the private sector in there. We have been pivoting from a broadly government and public sector portfolio into a much more balanced portfolio. So there will be possible. This economy definitely is impacted by the election cycles, and it's still thin. That whether it's an election cycle or a monsoon cycle or global flows, all of it has significant impact. So I wouldn't say that we will not be impacted, but the big shift that we are doing is pivoting from the public and PSU as the primary segment into corporates as the primary segment.
What could crush your optimism? What could go wrong?
That's why I said our optimism is not just about the short-term, medium-term demand. Our optimism is really bolstered by actually cresting the peak of a significant change. that's not going to be crushed easily. So it's something that we're going to carry for the next decade or more, because this is the most critical aspect of our industry. And our ability, you asked about the US economy. Actually, we've been very systematic about building in resilience into our business. We have been early in opening up new geographies, figuring out what is the right business model for it, making the investments, creating the position so that we understand it, whether it be going into the non-English speaking markets of Europe, where today our investment in Germany is really paying rich dividends, building out tough markets like France and Japan, the investments we have done in Latin America. These are all, this is the way you build resilience in, so that you are not single sourced into one, and you will obviously have maximum benefit coming from whichever is the growth engine at any given point in time. Today US is the growth engine, and that's where we will participate. Tomorrow if it shifts, I think we are well positioned to be able to participate across the world.
Now, when we spoke a couple of years ago, digital was barely 10% of the total business. It's nearing 30 now, almost 30 now. And that time you made a point that the new technology starts at a lower margin and then you ramp it up. Now you are ramping up your digital business. The same clients are giving you more business. And if digital grows more, are we looking at a reboot in your margins on a longer term basis? It may not happen this quarter, it may not happen next quarter, but if the technology changes, the history is anything to go by. With each change in technology, TCS margins have only gone higher. And like we say in markets, history may not repeat itself, it rhymes. Will history rhyme again?
I think the comment has to be seen in the context of our 26 to 28 band. What we had said is, as we were going behind that, I said that the 26 to 28 depends on both growth as well as currency depreciation as two strategic levers inside that business model, the basis of which we say that we should be able to maintain stable margin. So margin stability itself is a big task, and that underlying it is this assumption that there will be a constant relevance, because if technology change were to stop, we will actually start losing relevance to the customer and then become a commodity. And that is the lever that we were talking about, saying that as this new growth engine kicks in, we should be able to get back into our target band. And we have started coming back, because both you are seeing the growth coming in, you are seeing the currency start readjusting back to the long-term trajectory, and we are coming back into that band of 26 to 28. I think that is a stable band on which the business model is structured, and unless some of these fundamental pillars change, the band should maintain. But these pillars are sticky in nature, so you will go through phases of it again going back and coming back in it, or if there is a one-off benefit, it might even overshoot on the other side.
Two quick questions. You've been very vocal in the past when there were concerns in LATAM or Diligenta or Japan. As of now, there is no warning per se from TCS. All is looking good, all businesses are firing full cylinder, and there is all-round growth. Can I assume that?
We are fairly well balanced in growth. When people ask us specifically what is the negative that you see, global trade is there. Yeah, I think the world is volatile, and there will at any point in time be pockets of volatility. If it spikes, it will spike, and we will be exposed to it. But sitting where we are, I don't think we could have hoped for a better situation.
Minus TCS, what is keeping you busy these days?
What should be keeping me busy, I'm not being able to spend enough time on it.
Well, your stock is the best performing stock this year on the Nifty. It's up more than 60% ever since you took over. So I'm sure it must be a sense of pride for you also.
It's a great sense of pride, but I think it's not about the 60 or is it up or down. We need to take a slightly long-term view on it. I think we're getting too narrowly focused on the what should I say, the hypnosis of your ticker. So we need to be able to get out from that.
I mean, I've been criticized in the past that I'm a Parma bull on TCS. I'm assuming that what you've done, you will deliver better from here. Will I be proven right or wrong?
In the course of time, yes.
Appreciate your time. Thank you for joining us, and good luck with the coming quarters. Thank you very much.
Thank you very much.